Ever wondered why some people's property portfolios grow stronger than your Uber searching price bill? Let's break it down the strategies that actually works, and we will keep it fun. Key strategies to build wealth through property. Having the right strategy is crucial, especially in today's dynamic market. Here are some key strategies and principles we will be covering and helping you implement in this series. If you retract back the episode 1, we explored the fundamentals. What are those fundamentals? Buy where the growth is. The number one rule is to choose locations with strong fundamental drivers. Look for areas with growing population, booming economies, and tight housing supply. These are the markets primed for price growth. Right now, Australia's population is rising by 450,000 people per year, while new housing supply lags behind, which creates huge demand pressure. Some of the highest growth opportunities are in markets that combine affordability with high demand. For example, Darwin, Brisbane, Perth, Adelaide are highlighted as markets offering a mix of reasonable prices, solid rental yields, and room for capital growth. Investors are already catching on. Interstate buyers are flocking to smaller capitals like Adelaide and Perth because they see better value and upside there. Have you ever been to Perth? My recommendation, go and check it out. Lesson: don't just follow the crowd in expensive cities. Analyze the data and consider high growth corridors. We will dive more deeper into how to research and identify those hotspots in upcoming episodes. Think of it like dating. Don't chase the one everyone else is swiping right. Look for the hidden gem with real long-term potential. Leverage smartly. Use equity if you have, or OPM stands for others people's money. As mentioned, real estate lets you multiply your wealth through leverage. A strategic investor uses the bank's money, a mortgage in this case, to amplify returns while being mindful of risk. Start with the property you can afford, then let time and market growth do their thing. Your equity will rise as the property value also rises as you pay down the loan. Many Australians have built multiple property portfolios by refinancing and using equity from one property to purchase the next property. For instance, if you invest 500k into a property and that property grows by 600k, that's 100k equity gain, didn't it? So which you can leverage and use into your next property and increase your portfolio. So whether you are new to the investment game or getting into the market, use these strategies to enhance your ability. We will also show you how to calculate your equity, understand refinancing and leveraging prudently, so debt becomes a tool for wealth, not a burden. Remember, leverage is powerful. Use wisely, it accelerates wealth. Used recklessly, it will backfire. It's like borrowing your mate's ute to move house. Fantastic. If you know what you're doing, but a disaster if you hit the carport on the way out. Maximize cash flow. Don't ignore rental yields. Cash flow is the lifeblood of a sustainable property portfolio. While capital growth often gets the spotlight, rental income keeps you in the game. It helps cover your mortgage and expenses, and it can even provide passive income for you. Remember, like in the previous episode, we talked about some of the corridors with 6.5 to 8% rental yield. In the current market, the rental yield is strong and record low vacancy rates. You know what does it mean? It's mean the rental yield also have the potential to increase the capital growth. So leveraging all these three components together, that's going to gain an acceleration. So places like Darwin are offering 6% rental yield, which is usually high and attractive to investors. Hence Darwin recent double-digit prices growth has investors buying. We will talk about positive cash flow properties, how to calculate yield, and even strategies like dual income properties or short-term rentals to boost cash flow. The goal is to make sure your investments can pay their way as much as possible as you can comfortably hold them for the long term. Think of cash flow like coffee. You can survive without it for a while, but you will start making some very bad decisions. Be opportunist, but be patient. Think long term. I always say opportunistic is a real game changer. So being as an opportunistic is a good thing. Real estate is not a get-rich-quick scheme. It's a get-rich sure, as long as you're patient and strategic. Building wealth through property takes time. You are harnessing compound growth on large assets. The good news is, even boring growth can be powerful. Australia's national home values are about 5% higher than they were a year ago. 5% might not sound thrilling, but on an 800K property, that's $40,000 gain in a year without you doing much or lifting your finger. Over 10 years, moderate annual growth can transform your financial position. The key is to get into the market as soon as you're able to. Then hold for the long term. Don't try to time perfect highs and lows. Instead, focus on buying quality properties you can hold comfortably. Even during short-term market dips, remember that most regions' prices remain well above pre-pandemic levels, thanks for the huge growth spurred in 2020 to 2022. Real estate rewards those who are patient. We will discuss how to set a long-term plan, ride out cycles, and even use downsizing to your advantage, property sales, anyone. In the next episode, we will talk about. So patience in property is like wanting for your Uber after a night out. It feels like forever, but it's worth it if it actually shows up, which in most cases it shows up, didn't it? Let's talk about some creative strategies for new buyers. Rent vesting. If you're feeling priced out, off the market, don't lose hope. Get creative. One strategy rising in popularity among young buyers is rent vesting. Rent where you want to live, say close to city, jobs, your lifestyle if you prefer beach, and invest into a property where you can actually afford. This way you start building equity and wealth without compromising your lifestyle. In fact, more and more first-home buyers are embracing this approach. There's been a 21% jump in first-home buyers taking rent vestors loans recently. Surveys show over half of new buyers would consider rent vesting now, a trend driven by high city prices. It's becoming so common that experts predict rent vesting could become the default strategy for the next generation of investors. We will explore how strategies like rent vesting, partnerships, or even buying interstate can help you get on the property ladder sooner. The message is, don't feel locked out just because you can't buy your dream home as your first property. There are inventive ways to get started on your wealth journey, so don't get caught. And we will cover them so you can pick what fits your life. It's like dating someone in another city. You get the lifestyle you want, but your commitment is somewhere cheaper. The other strategy I would say is being optimistic, looking ahead. This was just the introduction which we just did for Khizer & Co. But in upcoming episodes, as we discuss, we will be drilling deeper into each of these topics and more. You can expect tactical, hands-on advice on things like finding high-growth suburbs, securing the best financing deal, navigating the buying process, and even tax tips to maximize your investment returns. We will bring in some real example success stories and maybe a few special guests from the industry to share their wisdom. Most importantly, we will keep everything up to date and data driven. The property market moves fast, and we promise to bring you the latest news and research in each and every episode. Whether it's the newest interest rate decision, a government policy change, or a hot off-the-press report on housing trends. As of now, we know the market is on the upswing and ripe with opportunity. Especially if you apply the right strategy, our job is to make sure you have the knowledge and confidence to seize these opportunities. As Frank Sinatra say, in other words, and we will say, we will do the research so you don't have to spend your Sunday night buried in a 48-page housing report, unless that's your idea of fun, in which case we need to talk.